What's up, gang? Welcome to Cosmic Training Academy. And you know what? It dawned on me when called me and they was a single mom and she said, listen, I'm going through tough times. I just need to figure out a way to just make a couple $100 every month to cover this car note. I said, how much is your car note? She said, my car note is 300 and something dollars, right? I said, okay. I said, you want me to tell you how to do it? She said, yeah. I said, first of all, you need to go to the class and go to our little link and join the class, and you will figure out how to trade options. I said, but just for the sake of instruction, here it is. Using the broker, I'm using the broker Robinhood, but you can use a broker of your own choice. It really doesn't matter. Remember, when we're doing options, and that's what we trade on this channel, options. Soon we might be moving to futures, but we haven't got there yet. Right now, so options. One thing you need to know about options is options have a time of expiration, meaning that they expire at a certain time and date. That's what options is based around, time. They also have a thing called Greeks in options. There's a thing called Greeks. In those Greeks, it explains to you different facets that change that option. Okay, so in other words, for an options trader, the number one Greek that you need to pay attention to, or one of the most important Greeks, is theta. Theta, that's Theta. Other words, theta represents time. So it sounds crazy. So first of all, you're looking at options, then you go to the Greeks, then you go to look at theta, and that's going to tell you about the time decay, meaning that how much is going to cost you for every day that option is out there. Okay, and I'll show you that a little bit later. Okay, so now if you want to think about it, a budget to make some money. Okay, let's just think about $300. If you think about $300 flat, then you need to make at least um, $10 a day. Okay, so let's just take $10 a day. Now, right now I'm using SPY. Why am I using SPY? The reason why is because we know that SPY has a daily option expiration. One of the few that's in the market that expire every day. So that means you have an opportunity to open and close an option every day. Now, keep in mind now, you probably need to have it's going to get tricky because some brokers don't allow you to open and close an option on the same day more than 3 times a week. So keep that in mind. So without getting hit with a pattern day trade rule. So, but that doesn't mean you can't have different accounts and do the same thing. So just imagine you had 2 or 3 different accounts, or you just have two. So that means you do 3 on one and 2 on the other of this type of trade. So check it out. We're on SPY. We're going to go down here to trade. We're going to go to trade options. Okay. Now we're going to look at today. Okay. All right. Now today, why? Because we're going to open and close this option. We want this option to expire and close out today. So it don't have no time. That means it's got to do what it's got to do today. Okay. Now, the reason why theta is going to work in our favor in this is because we're not going to buy options. We're going to sell them. And whenever you're selling options, theta and time decay is always on your side, because it's up to the other side, who the buyer is, to make it work. If it doesn't happen for them, then you win. That's the reason why selling an option is so much more powerful to make money over the long term and be consistent. However, buying an option makes you money quickly over short term, or you lose money very quickly. So it's a lot more money when you buy an options, whether losing or making, profits or losses. Okay. So now we're going back to the idea of making $300 a month or $10 a day. So here's a quick way, guys. So first we look at SPY, and we see that SPY on the week. There's the month. That's the week. That's the day. So if in case you didn't know. All right. And so then we realized that on the week, or even if we looked at the day, the low, it's really low for the week. So under 412. So you gotta remember, SPY is at a low. It's at the low for the year. Oh, it's not the low for the year. Okay, there's the low for the year, but it's pretty low so far. So, but remember, we only got to make it through today. So unless it drops really, really hard today, we can't lose a lot of money. But I'm gonna do a strategy that's not gonna make you, even if it did do something out of the ordinary, you won't lose a lot. So today, we know if it gets below we know below 412, 411. Okay, 412, 411. So we go to the top and we look at we do sell an option, right? And what we're doing is we're selling an option. We're saying that we don't think it's gonna go below a certain point. So when we say below, that means put. So we're selling a put. Okay. So remember, options is like a telephone. You buy when you call, when you're gonna call somebody, you call them up. That means it's a buy, it's going up. When you hang up the phone, you're selling and you're putting the phone down. So, okay. So just remember that. Think of an option as a phone. Okay. All right. So now there's the options. I'm trying to see if okay. Anyway, so this option right here, we got 414, no. We got 412, no. We got 411, not quite. Look at the chance of profit there. You see that chance of profit? 79% chance. Nah, so. I want to get a really good chance because I don't really want any chance. Just remember, we're going for high probability. So 87, that's pretty good, but I will go with 87, somewhere between close to 90. 87 looks pretty good. Anything over 85, I think, looks pretty good. And then look at the price, 408. Okay, 408. So that's lower than our low for the week. So 412, 410, 49. We're going all the way to 408, which is almost a 90% chance of profit, nearly. Okay. Now, if you want to go to 90, you could. So let's go down to 91. If you're really worried about it, let's go to 91. That means you only got a 10% chance of losing on this trade. How much is it gonna pay you? Because remember, when you sell an option, you get paid. So it's gonna pay you $19. Okay, that's not no money. That ain't what we need. We need more. We need less. We need 10. We need at least $10, right? So now, instead of us taking a risk, because remember, when you sell an option, you have to possess 100 shares, or at least you have to put up 100 shares of that stock's value in cash. So that's considered a cash secured put. Cash secured put. If you put up the cash, that's a cash secured put. If you put up the shares, then you got a secured put. Okay. So, but in this situation, we don't have 100 shares at $407. Are you crazy? This is for small accounts, for people who don't have a lot of money. So what we're going to do is we're going to go ahead and take this one at 90% chance of winning. That's high. So you should. So that means out of 90 times you do this, only 10 times you're going to lose. Out of 10 times you do this, only one time you're going to probably lose. Okay? So that's good, you know? But what are you going to lose? Okay, first of all, that's our first leg. So what we're going to do here is we're going to do a spread. We're going to do a credit spread, right? Okay. So then we go down and we say, remember, we want to make $10 a day guaranteed. So that's 19 that we get paid. Now we're about to pay for something to protect us from losing too much money and from having to come up with all the money or the stocks that it would take to do this trade. Okay. So what I'm going to do is we're going to buy a put to protect us. This is what we call a protective put at $9. Why? Because 19 minus 9 equals what? $10. Okay? So that means it should have started going down below. We're gonna get protected anywhere from 405 below. That means it cannot drop any lower than that. But if it drops below 407, that's when we start losing money. But if it drops to 405, that's as far as we can lose money up to. So that range between 407 and 405 is where we lose money at. Okay? I don't know where my tool. There's my brush. Okay. I'm sorry, guys. So, I love to use this brush. So 405 and 407, the range between here is where we lose money. Okay? So we don't want it to reach, we don't even want it to reach 407. We want it to stay above 407, okay? We want it to stay above 407. All right, now, let me show you what happens. So this is called a put credit spread. You see that down there? A put credit spread down here. Put credit spread. I don't know where, oh, I can move this. Okay. This is a put credit spread. All right? So now just keep in mind that's what we're doing. All right. So I don't know how I moved that. Okay. Well, anyway, something like that. All right. So now that we do the put credit spread, let's see what it does. Okay. All right. So now with the put credit spread, you can see right now what it does. So that's a 407 put. And we get $19 credit to us. We sold that. Then we paid, because we took that $19 and we subtracted 9 from it. And then that gave us a credit of $10. You see that? That's why it's called a put credit spread. Why? It's a credit because we're getting credited the money. It's a spread because it's between two different numbers. It's a buy and it's a sell. Okay? So that's how the spread is. It's two different legs. Okay? But it's expiring the same day. Okay? All right. So now you see. All right. Now that we got that, let's continue. Let's look at our profit and loss chances. Okay? Profit and loss. Okay, and very important. So the maximum profit, as you see, is $10. That's what we're going to get as a maximum profit, $10. And then the maximum loss, look at that, only $190. That means as long as you can stand and lose $200, you can get into this. Okay, dig this, though. This is this is so powerful. And that, this is the reality of a put credit spread. You can make a guarantee, nearly guarantee 90% chance of you making $300 every month. Do you understand what I'm saying? That could change your life. $300 may not mean that much to a lot of people, but for somebody who just need to cover their car note or just need to pay for some child stuff or, babysitter or whatever, that $300 can make a difference. And remember, all spreads are not created equal. You can change this. You can change it. You can do more spreads. You can do multiple spreads. You can do this same one multiplied times 10. If you want to make $100 a day, you can do the same spread multiplied times 10. You just have to have 10 times $190, which is add a zero, which is $1,900. That means you'd have to have an account of nearly $2,000 in there where they can make sure that they can cover their losses. So as long as you got $2,000 in your account, you can sit around here and make $100 every day for 9 days straight with a chance of you losing it maybe once, which means you'd lose $1,900. So keep that in mind. So it has to be, it has to be worth it. So 100 times 9 is 900. So you got to be careful. Understand that. Okay, so anyway. And you might want to raise your probability up to 95. So whatever. Okay, so just saying that this is just what we. So this is showing where we can lose at. Okay, so apparently at 406 is when we break even. That means we ain't made no money, we ain't lost no money. It has to drop to 406. Why 406? Because 406 is right between the 407 that we're selling and the 405 that we're buying. So 406. That's why that's where the break even point is at. Okay? So done, right? So that would be, if you do that every day and you collect that $10 every day, then that's $300 a month, guys. I mean, so think about that. How could that help you? You know, how, and this one I told you can change it and do it to 10 times 10. This is what I was talking about. So say for instance $10 ain't enough. You want to make more. Here you could do it right there times 10. Now here's your estimated credit. You see that? What did I tell you? Didn't I tell you that it's going to be $100? There's your credit right there. $100. 99. We did 10 of those. The price is at $10, which took us estimated credit $99. You see what I'm saying? Look what it says. 1,000 shares. Yeah. So can you dig that? So like I said, you could do it for 10. You could do it for 20. It just depends on how much money can you afford. That, because if we did it for 10, let's review it. How much do they want you to have in capital? Let's see. But I say 1,900. Well, anyway, they don't want profit and loss. Yeah, see, 1,900. That's what I told you guys. 1,900. Yeah, all you did is multiply times 10. See the maximum profit of $100, maximum loss 1,900. Break even is at the stock should be at 406 with break even. So again, this is what I'm saying. If you did 10 of those in one day, you would make $100 a day. The maximum you could lose is $1,900. But hey, if you got a 90% probability, 91% probability of winning, then that means 9 out of 10 times you're gonna take $100 home. But keep in mind now, that one time that you lose, it costs you $1,900. So you gotta be careful. You have to really be paying attention to the market because you want to have very few chances of you losing. You know. But anyway, guys, that's that on Mr. Cosmic Trading Academy. That is a put credit spread, and that's how you can make guaranteed 90% probability cash in your pocket every month, every day, every week. 90% chance. I don't know what else to tell you, man. You know what I'm saying? I mean, this is how you can travel the world, live different places, multiple stream of income. This is what I do. I mean, I just add this stream to other things. We make journals on Amazon. We do all different kind of stuff. Teach English as a foreign language. We so many different things that we do. So just think about that, guys, and we'll see you on the flip side. Talk to you later. Thank you.